apexinvesting.com, and we do these webinars for Nadex every Monday night at 7 p.m. Eastern Time. And we do these educational and informational webinars. And if you've been with us, you know we every so often, every couple months, we kind of cycle back through, and you know, some weeks we're covering very advanced strategies of different ways to use binaries and spreads, and then sometimes we kind of roll back and start over and go through some of the basics. You know, there's constantly new people joining up with Nadex and wanting to learn what is a Nadex binary, what is a Nadex spread, what are they, how do they work. And tonight is one of those nights. Tonight we're going through and we're covering Binaries 101, kind of the basics of a binary, what is a binary and how does it work. So for some of you that have been with us you know, and been trading Nadex for a while, this may be some very elementary stuff for you, some very basic stuff for you. Just keep in mind we were all new ones. We were all in this place at one point and wanting to even understand what is a binary. And so tonight's webinar, if you're a veteran and been with us for a while, bear with us tonight, but tonight is going to be, especially for the newbies and even for some of you those that have been around a while, it's always a good idea to go back and kind of cover the basics. So tonight's webinar is not going to be, you know, detailed charts and strategies and systems. It's Binaries 101, what is a binary? So let's hop right in. Let me knock out our disclosures here. Trading futures, options, or any financial instrument involves risk, may not be suitable for every investor. Information here in this webinar is for educational and informational purposes only, not an offer or solicitation of an offer to buy or sell any particular financial instrument offered by Nadex. Past performance not indicative of future results. So if you are brand new, make sure you hop on over to nadex.com and you can get some information there on the various tabs about the products that Nadex carries. Basically, Nadex offers two products. They offer binaries and spreads, and you can get some information there, and I'll show you in a minute where else you can get some detailed information. You can also hop on over to nadex.com and get a free demo account. All right, Nadex will give you a demo account with $25,000 of demo money. You can hop on and get familiar with the different products that Nadex offers, the different binaries and spreads. Get familiar with the platform, the products, you know, entering and exiting orders, really get a good feel of it. You can utilize your demo account to test out any new strategies or systems in demo as opposed to using your live money for that. And you always want to use your demo account to practice a system, master it, get it down, be profitable in demo, then hop over to live. So again, go to nadex.com and get some free info there and get a free demo account. Okay. And like I said, my name is John Skelton. I'm with apexinvesting.com. Apex and Nadex are two complete separate companies. Nadex is the exchange. Apex, we're an online company, a group of traders helping traders. You can check our site out, apexinvesting.com. You can sign up for a free basic membership. It'll give you a bunch of free education on Nadex binaries and spreads, a bunch of information on step-by-step training courses and strategies and systems of how to trade binaries and spreads, multiple different strategies and systems there, some news calendars. We have some binary and spread scanners, free deviation levels you can get plotted right on your chart. We show you how to get some free charting platforms, absolutely free futures data, free Forex data. Again, basic membership will give you access to all of this free education, literally hundreds of hours of webinars, education on binaries and spreads, live trades, different strategies and system and ways to trade them. So definitely make sure you take advantage of the free tools that are there for you. Get your free demo account with Nadex. Sign up for your free account with Apex. Check it out. Take advantage of all the free education there. Okay. Tonight, like I said, we're just going to talk about the basics of a binary. What is a binary and how do they work? For more information on ways to trade them, you can check out some of the webinar archives. You can check out some of the free information here on the Apex website. While you're at it, hit up facebook.com/apexinvesting. Like us and follow us on Facebook. You get updates on upcoming webinars and new strategies and systems. Once you've liked us, just click the liked button there. Make sure you select all posts. That way you get notified. Just an easy place to keep up with anything new. So tonight's subject, what is a Nadex binary? What's the value of a Nadex binary? What markets can I trade? How to place orders, and getting started. So let's jump right in here. How are they? What are they? How do they work? Well, the benefits of trading Nadex binaries or trading Nadex spreads is capped and defined risk. With Nadex binaries, you have no stop outs, no whipsaws. You have limited defined risk that's known before you ever enter a trade. Okay, you can never lose more than your defined risk that you know on the order ticket before you ever press enter, press the button, enter that trade. And I'll show you that here in a moment. Your maximum risk is your margin. So it's not like trading, futures or spot Forex where you have to put up a certain amount of margin and, but your loss in your account could possibly be more than that or unknown, unlimited. You know exactly what you're looking at as far as maximum risk ahead of time. There's no margin calls and very low requirements. You can do one binary contract or you could do hundreds. Okay, so what are binary options? Well, binary options are short-term, very fast-moving contracts with only two possible outcomes at expiration. At expiration, a binary is either worth 0 or 100, and that's it. That's what binary is. Yes or no, 0 or 1, true or false. It's a yes or no. Now, let me pull over the Nadex platform here real quick. All right, so let's just go to, as an example, Forex binaries and euro dollar. As you see, we've got multiple expirations here. We'll talk about that in a little bit. Let's just look at this binary here. These binaries opened up at 6 p.m. and they'll close at 8 p.m. Any time frame you ever see listed on the Nadex platform is in Eastern time, okay? So these binaries open up at 6 p.m. and they'll expire at 8 p.m. So if we click that, it's going to pull up this right here, okay? So each one of these here, you see this list here? See these prices, 14.39, 35, 31. As you see in this particular example, each one of these prices, these are called strike prices. As you notice, they're all 4 pips apart, right? Well, each one of these is a different binary contract, okay? You can see over here on the offer side, here's the amount you can buy the binary for. On the bid side, that's the amount you can sell a binary for. All right. So what is a binary? Well, if we click this, it'll open up a ticket for us to either buy or sell this particular contract. Like I said, each one in this list is a different binary contract. What is a binary contract? All a binary contract is, it's simply a statement, all right? And what is this statement? This states that the euro dollar will be greater than 1.1411 at 8 p.m. today. That's it. That's the binary contract. That's a binary. Simply a statement. Euro dollar will be greater than 1.1411 at 8 p.m. So either that statement will happen or it will not happen. If I think, yes, this statement is true, I think the euro dollar will be greater than 1.1411 at 8 o'clock, then I would buy the binary. I'm saying, yes, the statement is true. I believe it will happen. So if I buy this binary at 8 p.m. when it expires, if the euro dollar is greater than 1411, then this binary will be worth $100. So if I buy it for $49.50, well, I'm putting up $49.50 to buy it. My maximum profit will be $50.50. If you add these two numbers together, that equals 100. So if I buy it, yes, saying yes, the statement will be true, and it is true, well then at expiration it's worth $100. So I paid $49.50 for it. At 8 p.m. when it expires, it'll be worth $100. If I buy it and the euro dollar does not close above 1411 at 8 p.m., if it closes below that, then the binary contract at expiration at 8 p.m. is worth 0. So it's that simple. It's either worth 0 or 100 at expiration. Now, I don't have to hold a binary all the way to expiration. I can exit early, okay? And we'll talk about that in a little bit. All right, again, this statement says the euro dollar will be greater than 1.1411 at 8 p.m. What if I think that that statement is false? I don't think it will expire above that. I think the euro dollar will expire below 1411. I think the market's going down. I think the statement is false. Well, then I don't want to buy it. I want to sell it. If I think, so all a binary contract is a statement. If I think the statement is true and will happen, I say yes, I want to buy. If I think it's false and it won't happen, I sell and say no, I want to sell. And again, there's multiple different prices and strike prices to choose from at various different prices to buy or sell. Okay? So that in a nutshell is a binary contract as you see here on the Nadex platform. But let's kind of jump in and explain that a little more. So like I said, at expiration, a binary contract is either worth 0 or 100. It's simply a true or false statement. Either the event will happen or it will not happen. You can hold a binary until expiration or you can exit it early. And it can have dramatic changes in value regardless of the market volatility. You don't necessarily have to have a huge trend or hundreds of pips move in order to be potentially profitable with a binary. It boils down to simply one pip, or even 1/10 of a pip. Is it above or below the listed strike price? So therefore, you can trade binary options in volatile markets, trending markets, or even flat markets. Okay? So even if the market is not volatile, the binary option can be volatile. The price can quickly move from 30 or 40 or 50 or 60 up to 100, as long as if you're buying, for example, the market does expire above that strike price. So this allows you to be able to leverage the volatility of the Nadex binaries itself for potential high percentage capped returns on small investments and small capped known risk. Okay? And the floor of 0 caps the risk of a long position and the profit of a short position. The ceiling of 100 caps the risk of a short position and the profit of a long position. What does that mean? Well, let's break it down. All right, let's break it down so you have a good understanding of the basics. Okay, so here's an example of going long, meaning saying yes, buying. We're going to buy a binary. If we buy one Nadex binary at $25, remember at expiration, there's only 2 possibilities at expiration. It either expires being worth 100 or being worth 0. So if we buy a binary for $25, that's our maximum risk. Okay, buying it for $25, that's the amount of money we have to put up in margin. $25 is the amount of money that will be held from our account. $25 is the maximum that I can lose. All right, what's the maximum reward? Well, if I buy for 25 and it expires in the money, meaning it expires true, then it'd be worth $100. So my maximum risk is $25. My maximum reward would be $75. So when in a long position, when you're buying a binary, the amount you buy the binary for is the amount at risk. So if I bought it for 25, whatever you buy a binary for, that's your total risk. The risk amount is the money you're putting up to place the trade. The difference between what you buy the binary for, the difference of, in this example, 25 compared to 100 is the maximum amount that I can make. Okay? Let's look at another example. If we bought a Nadex binary for $75, well, $75 is my maximum risk. That's the most I can lose. That's the amount that I have to put up out of my account to get into the trade, $75 is the amount I am buying it for. So $75 is my maximum risk. My maximum reward is going to be what? The difference of where I buy compared to $100, because the most a binary can be worth at expiration is 100. So my maximum risk is 75. My maximum reward is 25. Okay? So let's take a look at the opposite. What if we're going to sell a binary? Okay? Well, if we sell a Nadex binary at $75, our maximum risk is $25. You just have to look at it opposite of going down. So if I sell at 75, my risk is the difference of where I sold compared to $100. So therefore my risk is only $25. My maximum reward would be $75. Okay, we're just going the opposite way when we're selling and saying, no, we think the market will not do that. We think the market will go down or will at least expire below the strike price. So on the sell side, when we're going short, selling, saying the market's going down, saying the statement will be false, the amount we sell a binary for is the maximum amount that we can make. So if I sell a binary for 75, 75 is the max amount I can make. So the difference between what I sell the binary for and $100 is my amount at risk, and the amount that I sell it for is my potential profit amount. Let's look at another example right in the middle. Again, selling. If I were to sell a Nadex binary for 50, my maximum risk is what? My maximum risk is the difference of where I sell compared to $100. My maximum reward is the difference of where I sell down here, meaning my maximum reward is the amount I sell it for. So my max risk is 50, my max reward is 50. Now, some of you are saying, hey, that kind of makes sense, 0 and 100, but buying and selling, wait, they're opposite. I got a little confused. Well, feel free to watch this video again. Also, feel free to play with the Nadex demo platform. But the nice thing is, it will tell you right up front. All right, if you're ever confused, it will let you know right up front. So let's take a look here at an example of an order ticket. All right, let's just say this particular Nadex binary is for the euro dollar, and let's just say it says the euro dollar will be above 1.3960. See it right here. The euro dollar will be greater than 1.3960 at 3 p.m. This is an older example, but it's just an example. Okay, so that's the binary contract. That's the statement. Is that statement true or false? Well, we can buy one Nadex binary. We can buy the binary for $85, or we can sell the binary for $79. So if we want to buy it and say, yes, that statement is true, I think it will happen, we buy it. If we think, nope, I don't think the market will be greater than that, I think it's false, we can sell it. Now, what is the difference between these two prices here? Well, that's what's called bid-ask spread. All right, the market maker is saying, I'll let you buy this from me for this price, or I'll sell it to you for this price. Okay, and that's what a market maker does. So let's talk a little bit about the midpoint, meaning we've got 85 over here, we've got 79 over here. All right. Well, the midpoint is if we added the two prices together, if we add up 85 and 79, that equals 164. If we divided it by 2, because there's two prices, it comes out to $82. This price point tells us that right now, at this second in time, that it believes there's an 82% chance that this binary will close above 1.3960 at expiration. Now, I'm not trying to give you a winning percentage or something to trade off of. What I'm trying to tell you there is, for you to trade binary options, you need to have an indication of what direction the market is going. Whatever strategy or system you use, whatever charts and indicators you use, to be able to show that the market's going up or down, you don't just randomly go in and choose a binary based on what it's priced at. And you don't just go in and buy a binary just because according to the midpoint numbers, it's got an 82% chance. What if you go in and you buy that binary with an 82%? I mean, hey, we all like 82% chance, right? The 82% probability is pretty good for trading. But what if you go in and you buy that, but you didn't look at your chart that just gave you a down signal saying the market's going down, okay? Or what if you sell this, but your chart just gave you an up signal, okay? So you cannot just trade binaries based on price, or just based on a low risk, or just based on a high dollar amount reward. All right, you have to trade them with strategies or systems, okay? And we'll be talking about strategies and systems in future webinars, or you can check out you know, some of the previous webinar recordings where we've talked about that. So this price point tells you that at this second, all right, it believes there's an 82% chance this binary will close above 1.3960. It's also why this is priced a little higher at 85. You saw that there's other binaries out there that might be priced lower. Let's take a look here. Look at this binary option right here, 1.1415. You can buy it for 20 or sell it for 12. What's the midpoint between those two? About what, 15 or 16? So that would mean there's like a 15 or 16% probability of this expiring in the money. Why? Well, because the market right now is at 14.10. This strike price says it has to be over 14.15. So that's, if you were to buy this, you're saying that you think the market's going up, and you think the market's going to go up, you know, from where it is now, from 410 to 415. Okay. Why is this one priced so high, a little higher at 87 or 79? Well, what does the statement say? The statement says that the euro dollar at 8 p.m. will expire above 1407. Well, right now it's already at 1410. So the market's already above this strike price, right? So as long as the market stays above there, this will expire being worth $100. That's why it's priced a little higher. It's a higher probability because the statement's already true. The market's already above 1407. But the market can go down, right? So again, that's why you don't just blindly take these. You have to have some indication of that. All right? So if we buy for $85, okay, if we buy it for $85, it will automatically show us right here. Our maximum profit will be 15. Our maximum loss will be 85. All right, and you can see that for yourself. If you hop right on here on the platform, if you were to click this one right here, for example, and say, okay, I want to buy this binary, I want to buy size 1, boom, it pops it right there. Your max loss is $39.50. Your max profit is $60.50. If you add these two together, what do you think it's going to equal? Let's just make sure the class is awake here. If you added these two numbers together, what do you think it's going to equal? What is the most that a binary can be worth at expiration? Yep, exactly, $100. Okay. Now what if you're like, hey, I don't remember, how does that work with the buying and selling? Okay, well, that's if I buy it. What if I sell? It's going to tell me the same thing. If I sold it for 34, okay, the most I can make is what? 34. And what is my risk? My risk is the difference between where I sell 34 and $100, which is what? $66. Once again, even on the sell side, these two numbers are going to add up to 100. Okay, so in a sense, binaries are very, very simple. At expiration, they're either worth 0 or 100. So if I buy it, my max risk is the amount I buy it for. The most I can make is the difference of where I buy it for compared to $100. If I want to sell it, the most I can make is the amount I sell it for My risk is the difference of where I sell compared to 100 bucks. And as you see, it's always right there on the order ticket for you before you ever press enter and get into a trade. So you know ahead of time your exact risk amount. Your risk is capped. It's a very low margin you have to put up to get into a trade, okay, as opposed to, you know, let's say that you want to trade a futures contract on something that you got to put up $500 or $1,000 margin, or you're trading spot Forex where you got to put up several $100s or several $1,000s depending on your size. Okay, so it just depends, you know, what you're trading there, but you have very low margins here. Okay, so let's take a look here, like we just talked about, risk and reward on buying and selling. All right, and again, like I showed you, it's the same thing on selling. If I had the same contract for the euro dollar to be greater than 1.3960 at 3 p.m., let's say I don't think that statement's going to be true. I think that statement would be false. I think the market would be less than that. I want to sell it. All right, so I sell it. It'll show me right there. If I sell for 82, the most I can make is the amount I sold for, which is 82. The max loss is going to be $18, which is the difference of where I sold compared to $100. The same thing holds true here. If you look at the midpoint, 87 plus 82, okay, it shows you that there's an 84.50 shows you an 84.5% chance this binary will close above. So if we're selling it, okay, we're kind of going against probability there. We would need, all of us like, hey, I like to only risk 18 bucks and possibly profit $82, okay? But the reality of that is that's most likely only about an 18% probability that this will expire below because the market is already so high, okay? So any questions on that in general, meaning any questions on the basics of a binary that is worth at expiration either 0 or 100, and any questions on risk and reward from buying or selling? Any questions on that basic part there? Let me know before we move on here. Hey Scott, how you doing? Okay, so we've got a good handle on that then. And like I said, if you just open a free demo account with Nadex, you can hop right on if you're ever unsure of like, wait a minute, was that buying and selling? What was the risk or reward? All you got to do is type it in there. All you got to do is say, I want to sell one. Okay, that's my risk and reward. If I was to buy it, okay, there's my risk and reward. It's right there for you. Okay. Now, notice off to the side here. See this right here? Indicative index. This is the Nadex indicative. Okay. See, right now it's at 1.4089. And if you watch it, it will change here. Okay. That is the Nadex indicative. That is the current underlying indicative price, meaning this is what is going to determine your win or loss. So if I were, for example, going to say, all right, let me look at this binary contract. This contract says the euro dollar be greater than 1.1407. Well, where is the market right now? Because I might have some online chart that tells me something. Maybe I'm using some other data feed that tells me something. And what is it based on? It's based on the Nadex indicative index right here. So this is the number right here that has to be over 1407. Okay. And if you have any questions on how does that work, what is the Nadex indicative, I will show you here. If you can go to the Nadex website right here, nadex.com, okay, and there's a couple places you can get the information from, but let me think here. Where is the quickest place here to show you? Michael says, are binaries subject to the pattern day trading regulations? No, Michael, they are not, because they're what's called a derivative. Okay, Nadex stands for North American Derivative Exchange. So they are a derivative. So you are not subject to the $25,000 margin day trading pattern. Okay, Rudy, I'll show you that here in just a second here on settling. And Rudy, you meaning like how do you get out early? Is that what you're asking for? I'll cover all that for you here in just a second. Okay, yeah, I'll show you that. Absolutely. Let's see here. Yep, Leonard, that's what I'm showing you here. If you go to, hold on, let me pull it up over here. Give me just a second here. Let me show you how this works here, and I'll answer those questions for you both. Give me just 1 second. All right. Just pulling this up and trying to get a couple of these questions answered here for you. All right. Michael, did that answer your question on the pattern day trading? It's like if you're trading stocks and you're day trading stocks multiple times throughout each day, okay, you have to have a $25,000 margin. Okay, and that's one of the other great things about Nadex, whether you're trading Nadex binaries or Nadex spreads, is you're not subject to that, and you have a much, much lower margin requirement. So for somebody trying to get into trading that doesn't have, you know, a lot of capital or a huge account, all right, Nadex is great for that. Not only is it great for, you know, having a low account for somebody getting started, but you have capped limited risk, and you know exactly what that risk is before you ever get into the trade, as I showed you there. Okay, so give me just 1 second here. Okay, how to get out. Okay, let me cover that for you real quick here. Okay, at expiration, let's just say, for example, I was to enter into this particular binary contract right here. Okay, so let's say I was to enter into this contract and I was to buy this. All right, let's say that I want to buy this right here, to buy that contract. Let me just exit out of here. Give me 1 second here. Let's close this out. What time is it? 7:50. These are about to expire. Let me do a 9 p.m. one. A little easier example there for us. All right, so let's just see here. Okay, so if I were to, give me a second, I gotta, all right, so let's say I bought this contract, okay? So the contract I bought said the euro dollar would be greater than 1.1414 by 9 p.m., okay? So I bought it for $45.50. Okay, well, if I hold this till expiration at 9 p.m., if the market goes up and expires above 1414, then this binary contract, I bought it for $45.50. It will be worth $100 at expiration, which is 9 p.m. It will expire. It will close out. I'll get a settlement email letting me know that my payout was $100, and as soon as it expires and settles out profitable, my balance will go up by $100. Okay, so that doesn't mean I made 100, meaning it means that I had to put up $45.50 to get into it, and at expiration I'll either get paid out $100, which will be giving me the $45.50 back, plus giving me my profit, and then of course the fees are taken out. Or at expiration, if it expires under 1414, my payout would be 0. So to settle them out at expiration, I don't have to do anything. At 9 o'clock, when it expires out, and I either get 0 back or I get 100 back. Simple as that. Okay. At expiration, a binary, it'll always either be you're getting paid back a payout of 0 or a payout of 100. So to hold it to expiration, I don't have to do anything at all there. Okay? Now, let's just say that I want to exit early. All right, that's the one nice thing about Nadex binaries compared to other binary brokers that are out there, is that you do not have to hold it till expiration. Okay, now a couple things here. Let me pull up Forex binaries, euro dollar, 9 p.m. All right, let's just look at something here. Let me get rid of this. Let me pull this down. Okay, so euro dollar, 9 p.m. All right, so what contract did we buy? We bought the 1414 contract, right? This one right here. Okay, what can it be bought for right now? 48.50. What can it be sold for right now? 39.50. Okay, so notice right here, I bought the contract. See, it says position +1. Plus means I bought. If I had sold, it would say negative. Okay, so if I bought a binary, I can hold it to expiration, or I can get out of it early. What do you think I would need to do to get out of it early? So if I bought it, for me to get out of it earlier, I would need to buy it again, or I would need to sell it. I need to sell it, right? If I had sold a binary and I want to get out of it early, I have to buy it back. Okay, so let's say I bought this contract for 45.50. So what is my max risk? What's the most I can lose if I bought it for 45.50? Well, that's the most I can lose, right? So if I bought it, what am I saying? I'm saying I think the market's going up, or I think the market will be up above 14.14 in an hour and 5 minutes at 9 p.m., right? I've still got time on this. So I think the market's going to go up, because where's it at right now? It's at 14.13. But I think it's going to go up, and I think it'll stay up above 14.14 by 9 p.m. So I bought it for 45.50. I'm hoping it expires worth 100. Most I can lose is 45.50. But what if I'm wrong? What if I buy this binary, then a little while later, my chart turns around on me, everything's pointing down, everything says nope, the market's actually headed down. Well, do I just say, oh well, there goes $45.50. I'm just done, I'm out, oh well, it's all gone, I have to lose the whole thing? No, I don't have to do that. I can sell out of it so that I don't have to take the full loss. How do I know what that's going to be? Well, 14.14, that's the contract we bought. Where are the 14.14s? They're right here. Notice right here the sell side. What's it at right now? 37.25. Notice that same price is right here, 37.25. So I bought it for what? 45.50. The current market to sell out of it is 37.25, which is the same thing right here. Anytime this price changes, this will change. See my profit and loss? How is that determined currently? It's the difference of where I bought compared to where I can currently sell. So right now it's a difference of negative $8.50. So that's how the profit and loss number is calculated. It's just the difference of where you bought compared to what you can currently sell for. Now if the market starts to go up, okay, well, so if the market goes down, and let's say, hey, I'm wrong, it goes down, man, now this thing is down to $20 that I could sell it for. Why don't I just go ahead and get out now? Instead of losing 45, I'll only lose 25. Okay? How would I do that? Well, I bought this, right? So for me to get out of it, I have to what? Sell it. So it's right here in my open positions. I place that order. So if all I do is click that order, a ticket automatically pops up, and look, the ticket's already marked sell. Why do you think it'd already be marked sell? Well, because I bought this contract. The only thing I can do with it is sell it. So it automatically comes up a ticket listed as sell. So once again, I have it in my open positions. I bought it. I want to get out of it. All I got to do is click it. It automatically comes up as sell. It's already filled in for whatever the current sell price is. I say okay, and it's gone. It's gone out of my open positions. I sold it back. I got whatever the difference is put back into my account. All right, it's that simple. That's all I have to do. Okay, or once again, if I were to have sold this binary and I sell it, okay, it's in my open positions. I sold it. See, notice it says -1. So I sold it for $33.75. What contract is it? The 1414s, right here, 1414. What can I buy the contract for right now? 38, right here, 38. So I sold it for $33.75. I can buy it back for 38 right now. So what's that difference? $4. So if I sold a contract and I want to get out of it early, how would I do that? I would have to buy. So I just click it. It's already marked buy. I place my order. Okay. And, oh, hold on here. It moved on me before I got out of it there. Give me a second. Okay. So if I want to buy out of it, I just click it. It's already automatically marked buy. And I buy it back and it's gone. Okay, so that's how I get out of an order early. Now, what if I were to buy this and I'm saying the market's going to go up and I bought it for $39.25. If it expires true, the market expires above 1414. At expiration, it'll be worth what? $100. But as the market, let's say the market does start to go up. Well, as you see here, see these strike prices that are further in the money, meaning the market's further above them? Well, as the price starts to go up, so are my values, right? I bought it for $39.25, but let's say the market does go up, and then suddenly it's worth 40, and then worth 50, and then worth 60, and worth 70. Let's say that I could sell it at $70. Well, let's say I don't have time to hold on to it till expiration. I need to go somewhere, or I just want to close out. Well, I bought it for $39.25. Let's say that the market's going up and I could sell it at 70. Well, granted, I'd make more if it expired worth 100, but I bought it for 39. It's up to being worth 70. I just want to take my $30 and get out. Well, then the same thing. I just click it and sell out of it. So I can hold it till expiration, or I can get out early. And I can get out early whether it's going against me or whether it's profitable for me. Okay, does that make sense there? Does everybody understand holding till expiration or getting out early? Rudy says, do we have a time frame? Do we have a time frame if we decide to sell it? Okay, Rudy, right here, see this time left till expiration? Because this contract expires at 9 p.m. So we've got 58 minutes and 32 seconds until it expires. Okay, notice right here, see on the sell side, there's 50 contracts available. See on the buy side, 50 contracts available. All right, so let's just say I was to open this up and I wanted to buy or sell one of these. And let's say I bought all 50 of them. I took out the whole book. Well, in just a matter of seconds, the market maker is going to refill that with another 50, right? But the market makers stop quoting, like on these hourly binaries, they stop quoting the last 2 minutes before expiration, okay? or I think on like 20-minute binaries, it's like 1 minute, 5-minute binaries, 30 seconds. But like on these, for example, they stop quoting the last 2 minutes. Okay, now other traders may have buy or sell orders out there, but those last 2 minutes are what we call the dark zone, meaning there's not these big number of contracts out there from the market makers. So if you want to get out of something, I suggest you do it before the last 2 minutes before expiration, just to make sure there's contracts out there to fill your other side. Okay, so otherwise, yep, as long as there's bid or offers out there on the other side, you can get out of it. Okay, but you would not want to wait till your last 2 minutes there to do that. Okay, so yes, as far as Nadex, what are the Nadex fees? Well, it's 90 cents each side, meaning if I were to, when I bought this binary right here, okay, my fee was 90 cents. When I sell out of it, or when it expires, if it's profitable, there's another 90 cents on that side, or if it's not profitable, there's no fee on it. So it's either 90 cents or $1.80 for the round turn. Now, if I do more than 10 contracts at a time or more, it's just $9 on each side is the max. So whether I buy 10 contracts or 100, just $9. It's capped on each side there. Okay. Let's see here. No, in demo there's no fees. No, in demo, no, there's no fees in demo. Okay. Oh, yes, it does take in demo it does take an account into your balance so that it is like a live feed. Yes, but you don't have to pay that yourself. The demo is completely free. Okay. So yeah, it will calculate in. That way it's a true demo. All right, but no, you don't actually have to pay it. The demo is totally free. Okay. Demo is completely free there. Let's see here. Okay, you're asking about, let's see, I'm trying to catch up on a lot of questions here, guys, so bear with me. I know some of you are asking your question several times. I'm not ignoring you here. I'm just going through a bunch of them here. Let's see. Okay, this indicative price right here, what is that? How does that compare to spot price? A couple of you have asked that. All right, the way that the indicative price works, if you were to pull up a chart, like a spot chart, okay, you'll see that it's very, very close. It's not exactly to the tick. What it is this. Basically, the way that the indicative index is designed is it's designed to help you against spikes in the market, okay? So basically what it is, it's the last 25 orders, okay? And basically they take out the highest 10 and the lowest 10, and the average and the middle 5 are averaged out. That is what this number is. So like if you compare this number to like a spot chart, it might be off by like 1 pip or like 1/8 of a pip or whatever. It's very, very close, but the way it's determined is the last 25, take out the top 10, lowest 10, and the average of the middle 5. That is how the indicative index is figured. So that way, right at expiration, when it boils down to the difference of 1/10 of a tick, there's not some large order that comes in, it's just one order that knocks you out. Okay, it's the last 25, take out the top 10, lowest 10, average out the middle 5. That's how that is figured out there. Let's see here. Just checking out some other questions here. Leonard, I think that was your question. Did that answer your question there? How that's determined? Israel says, what's the minimum to open a live Nadex account? $100 minimum to open a live Nadex account. Obviously, you can put more than that, but minimum to open a live account is $100. Okay. Yes, Kirby. Kirby says, looks like we can only trade strike prices that have bids and offers. Some do not have bids or offers. Okay. Kirby, take a look here. notice on this one, for example, let's open this up. Why do some not have both bids and offers? Well, what is this strike? What is this statement? The euro dollar will be greater than 1434. Well, what is it right now? It's 1408. So there's a big difference there, right? So, I mean, the market's only at 1407. For it to go up to 1434 is a pretty big move, right? So for a market maker or any other trader to say, hey, I'll sell this to you for 30 bucks. You would love to sell that contract, wouldn't you? Hey, I'll sell it saying, no, it won't be at 1434 because it's only at 1408. No one's going to take that risk. Does that make sense? You know what I mean? It's because, yeah, that's a very good possibility that's not going to happen. So look at the other side. Right here, euro dollar will be greater than 1374. Well, it's already at 1408. So yeah, you'd love to buy that one for some good price, right? But no one's going to put that risk on the other side. But notice right here, like see these that are priced at 88.50. Well, I can buy this one for 88.50, 87.50. I'm risking $87.25. I can only make $12.75. That's not a great risk-reward ratio, but why is it priced so high? Well, because I'm saying it's got to be over 1402, and it's already at 1408. So you notice how the prices there are based on the probability compared to where the market is right now. When the market gets way far away from one or the other, there's just not going to be anyone on the other side there to take that. Does that make sense? So Scott says indices versus Forex or binaries similar. All of the Nadex binaries work exactly the same way, whether you're doing indice binaries on the stock indexes, all right, and notice that Nadex offers various different binaries. You have binaries on stock indices. For example, like these bottom four here are the US stock indices, like the Dow, the S&P, the NASDAQ, and the Russell. You've got the Japanese market here, the Nikkei. You've got the FDAX, the German market, the FTSE 100, the London stock market, and even China, okay? You've got Forex binaries on 10 different Forex pairs, foreign exchange pairs. There's even binaries on commodities, gold, oil, silver, copper, natural gas. They all work the same. All Nadex binaries work exactly the same as far as being worth 0 or 100. They all work the same as far as being able to hold till expiration or to exit early. The only difference in some binaries is the difference of the strikes, meaning on some of these here, let me just show you what I mean by that. If we just go back to Forex binaries, euro dollar, see these here opened up from 6 p.m., they expire at 8 p.m. Then at 7 p.m., we had some that opened up at 7 p.m. and went to 9 p.m. If I refresh this, it's 8:10 now, okay? What do you think just happened at 8 o'clock on these particular ones? Boom, we had some new ones that started at 8 p.m., they'll go to 10. Notice these strike prices here, 8 to 10, 425, 421, 417, they're 4 pips apart, okay? What if I looked at the dailies, though, on the euro dollar? Like we have some tonight that expired 11 p.m. Those are 20 pips apart. See that? What if I looked at weeklies? Those are 100 pips apart. So all binaries work the same as far as 0 to 100, exit early or hold to expiration. But some binaries, depending on the time till expiration or you know, maybe the stock indices work a little bit different or have a little bit different strikes widths than Forex. So each market can have different sizes between their strikes, okay? And if you ever want to see exactly what those are, all you have to do is hop on over to nadex.com, go to markets. For example, you can go stock indices, contract specs, and it's right here. the Wall Street 30, for example, okay, which is the Dow. It'll let you know. They have 20-minute binaries. They have intraday binaries every 2 hours, daily, weekly. It'll tell you when they start and when they expire, the strike width, 9 ticks, 7 ticks, 12, 20, number of contracts that will be offered each of those time frames. It's all right there, okay? And that will give you the information on stock indices, Forex, and commodities to understand what the difference is as far as those strike prices, okay? Is that helpful? Does that answer the question there for you as far as the differences between, I think Scott, okay, cool. All right. Somebody says, so is it better buying or selling? Well, it doesn't make it, it's not better to buy or better to sell. One's not better than the other. It's all about what direction is the market going. All right. It's simply, okay, this is your statement. It's going to expire above this. Do you think that's going to be true or false? What is the chart telling you? What is your strategy or system telling you? And that's where you want to buy or sell. Which one of these strikes you buy or sell all depends on how far you think the market is going to move. All depends on your strategy or system. Okay, we don't really have time to get into all the different binaries and strategies and systems. We do cover those on some of these webinars. We'll be covering some of those over the next few weeks. And you can hop on to, I'll show you where you can get some information about some different recordings there. Okay, Leonard won't be covering spreads tonight, just basic, just binary basics. Okay, so yes, with binaries you can trade stock indices, spot Forex, commodity futures, economic events. I showed you some of the different options there as far as indices and commodities and Forex pairs. There's even economic events like the Fed funds rate, jobless claims, non-farm payroll. They have a bunch of different expirations. I showed you some of those, dailies, weeklies, hourlies. On some of the Forex pairs, there's even 5-minute binaries. If you hop on here and you look, right here it says 5-minute binaries. On these particular Forex pairs, Aussie dollar, Euro dollar, pound dollar, and dollar yen, they do offer 5-minute binaries. What does that mean? It means literally every 5 minutes. Notice these expire at 8:15. There's 4 seconds left, 3 seconds, 2 seconds, 1 second. Boom, they're all gone, and look. These new ones just open up. They expire 5 minutes from now at 8:20. 4 minutes, 53 seconds. There's 5 strikes. At 8:20, those will expire, and new ones will pop out that expire at 8:25. They work the same way. Got your strike prices. It's either 0 or 100. These are extremely fast moving. Okay, you've got 4 different options to choose from. You know, some people, you either love the 5-minute binaries or you hate them. All right, some people say, man, they just move too fast. They move way too fast for me. You know, it's tough for me to keep up with them. They move too fast. You know, you can watch the prices change here yourself, especially the closer you get to expiration. Because think about it, right here, or let me show you a different example. All right, look at this one right here. This one is what? 42.32. The market's at 42.33. When we were looking at it a second ago, it was like 60 something, right? Now it's 70. The closer we get to expiration, the closer it has to get to being worth what? Either 0 or 100, right? So the closer you get to expiration, you can see these things shoot from like 58, 60 up to like boom, 90 bucks real quick. These things can go really quick. So some people love them because they're so fast. Every 5 minutes there's a new one. Every 5 minutes I can get into another one. I'm a part-time trader. I have very limited time to trade. You know, I like the 5-minute binaries. Some people say I don't like them because they're too fast. I prefer 20 minutes or hourly or daily, whatever. But there's options out there, a little bit of everything for everyone, okay? So binary options, again, they're good for all market types. You can go long or short. You can do straddles. You can scalp them. You can do premium collection. What do I mean by scalping? Well, we talked about that earlier. I bought something for 50. it went up to being worth 80. I just got out. I scalped it for 30 bucks. I didn't hold it all the way to expiration. I got a little bit of money profit out of it, and I got out of it. It's all kind of different strategies you can look at: options, spreads, butterflies, calendar butterflies, hedging, tons of different ways, numerous different ways you can use Nadex binaries, tons of different strategies and systems out there. I encourage you to check out nadex.com, and they do have a archive area of past webinars. You can also hop on to apexinvesting.com, check out some webinars there. Like I said, bunch of free education. We have some step-by-step training courses on binaries and spreads, step-by-step courses on how to trade binaries and spreads, strategies and systems, all kind of things. We also have somebody asked about charts. If you hop on over to the website, it'll show you there how to get some free charting platforms and some data. If you have any questions, you can hit us up on a help desk ticket or a live chat. One of the things that you should check out, though, it's an absolutely free tool for you, is our binary and spread scanners. What do I mean by that? Well, it makes it a ton easier. Let's just say, for example, that I've got charts open and I want to trade the euro dollar. Okay, well, let's look here. From 7 p.m. to 9 p.m., I've got all these different binaries available. Okay, so I got this strike, and this one, and this one, and this one. All right, and these are the prices, but okay, the prices are changing. All right, what do I have that goes from 8 to 10? Okay, well, I've got all these different strikes now on that one, and all these prices. What's available tonight at 11 p.m.? Well, those are total different strikes and different price. Now, wait a minute. What was the 9 p.m.? I forgot. You're going back and forth all over the place, right? Well, with our binary scanner, it will show you everything all at once. Like if you chose euro dollar, it's going to show you all of the strikes right here. See, these are the ones that expire at 4:30. These expire at 5. These expire at 7. It shows you all of them right there, okay? And it shows you the price you can buy for, the price you can sell for, all right there on one page. It'll show you all the expirations, all the options available. And check it out over here. See these red and greens? Remember before, if you're like, okay, well, if I were to buy this one, I don't remember. So if I buy one, my max loss is 60, my max profit is 39. If I were to sell it, max loss for, you got to go back and forth and fill all that out. It's right here for you. Here's all the binary strikes. I can buy it for this, sell it for this. If I sell it, what do you think the red number means? Risk. If I sell this one, 55 is my max risk, 45 is my max profit. If I buy this one, 54 is my max risk, that's my max profit. It's all right there for you. I don't have to go in and open up, you know, orders and go back and forth between screens. It's all right there for me. Okay, so again, take a look at nadex.com, go through some of the webinars there, hop on over to Apex Investing, take advantage of the free education there. Feel free to ask us any questions you might have. Let me just look at some of these last questions here. Isn't it better to be near the strike price? Not necessarily. It all depends on your strategy or system. We have a bunch of different strategies and systems there listed on our site. Some of them we use at the money binaries, out of the money binaries. It all depends on what you're going for there. Okay. Yeah, Rudy, personally, they're a little too fast for me. Fields, yes, 5-minute binaries are the fastest ones out there that Nadex offers. Leonard, are there advantages to trade 5-minute binaries? They're just a lot faster. They move super fast. Just a 1 or 2 pip move can be the difference of, you know, going from $30 to $90 in just no time. They're very, very fast, but you have to have a good system to trade them to be able to get immediate direction of the market. If your strategy or system is looking at 10-minute bars or hourly bars, looking at longer term trades and swing trades, that's not going to tell you what's happening in the next 5 minutes, you know. But if you're looking at tick bars or 1-minute bars and you've got some good direction of where is it going right now, where is it going in the next few minutes, might be something you want to look at. Okay. Greg, I don't have all my charting stuff. Greg says, can you do an example of a trend trade on, say, dollar yen? I don't have all my charting software here on this particular computer that I'm doing the webinar on, plus I'm running way over here. If you go to our site, though, we have several strategy and system videos there where we show live trades, walking through them, exactly what we're looking for, step by step there. Okay. Sam, is Apex Invest in a broker? No, we're not a broker. We don't trade for you. We don't trade money for you. We're simply an education company. Okay. So let's see here. Yes, Leonard, you can. Absolutely. From the scanner. Yep. Yep. Okay, guys. We ran over here. Sorry about the technical issues in the beginning here, but I hope this helped. Again, if you've been with us for a while, I've been trading for a while, some of this was kind of recovering the basics of a binary, but for any of you newbies, I hope this helped you get a little better understanding of Nadex, a little better understanding of Nadex binaries, how to place orders, and again, the power of being able to trade with a very low margin and a much smaller account, and being able to take advantage of defined, known, capped risk. That's very, very powerful, okay? So thank you for your time tonight. Again, hop on over to nadex.com, get your demo account. Hop on over to apexinvesting.com, get your free account there to get access to the free education. Let us know if you have any questions. You can find, Emmanuel, you can get the webinar on the nadex.com website. It'll be under the archives. It'll probably take a day or two for them to pop that up, okay? But they'll have it up there for you. I appreciate everybody joining us tonight, and I look forward to seeing you each and every Monday night at 7 p.m. Eastern Time. Thank you so much for your time tonight. Have a great night. Appreciate it. Thank you, Craig.